again, on Monday and Tuesday. On Monday and Tuesday, I talked about a rally happening with the Fed or with the presidential election, possibly earnings in there as well. Again, we got it with the presidential election. The market likes certainty. We got certainty. Wall Street is celebrating a return of President Trump's economic policies. Wall Street likes President Trump's economic policies. Watch the video all the way through. You're going to see, as good as they may be, it's not enough to stop the recession. Economic policies will take time to implement. Economy is being artificially propped up by the government spending right now, nearly $8 trillion, the most in any other time in history. If Trump cuts back on that, which they're saying they're going to do, the Trump team, then again, economic policies that are in place, again, will still have the recession. You have to understand it's not going to stop the recession. It can shorten it. It can make the pain less painful, but it's not going to stop it. The policies that Trump is going to implement, the economic policies, will take time to kick in. We're still going to have the recession. But the Dow, best day since 2022, 3.5% higher, up 1,500 points. The S&P up 2.5%, up 36 points above that 5,800 peak that we got. I told you what to be watching for. A back test of the trend line. We were at key support with the 50-period moving average. We're going to rally up, back test one of those trend lines. If we do it, get above the second trend line, the second broken trend line, we can move back to the first, and we can move to a new all-time high. We've done that. But this in great length and detail on Monday and Tuesday and over the weekend. I was expecting a back test of those trend lines. That's now happened. NASDAQ up nearly 3%. The Russell was up 5.84%. The VIX was down over 20%. That means the VIX is predicting that in the next two trading sessions, there's a 95% chance we will have a down day on the S&P 500 or a peak. One or the other. A peak or a down day. It's going to be a top, but it could. Watching yesterday, you know about the buy signal that I told you about on the S&P 500. This is a daily chart. I told you that it had shown up. Signals were still bearish. I told you with that buy signal, we can go back and back test the trend lines, one or both of them. Back above the second trend line that broke, we can go back to the first. And if we did, we can move to a new all-time high. The divergence with momentum here, the class divergence, we had these two equal peaks and price went higher and it gave us the sell-off. And again, momentum's still negative. So again, this rally is probably going to end up failing. We might see it go positive, but again, it's likely going to form this larger divergence. We're seeing the same thing on the RSI, the MACD, and other indicators. Now signals all flipping back to bullish, momentum line turning back to bullish. We'll be watching to see if they remain that way, and we'll be looking to see if we complete a topping process. Warned you in my last two updates and over the weekend that, hey, we could see a presidential, because the market was selling off, and especially I've been talking about the Dow. The market was selling off ahead of the presidential election and the Fed meeting. We could see a rally with both, or a rally with the presidential election and then a sell-off with the Fed, or a post-Fed sell-off or something. We got a rally. We got a powerful rally back up. Again, I talked about the back test of the trend lines. That's what we're doing. NASDAQ on S&P, NASDAQ, still negative here. Again, likely going to form another reference point of a divergence here, completing it with already moving to a new high. The gray shaded areas, again, I talked about telling us that something was getting ready to happen. It did. And again, we're probably going to see a rally up and then have the thing end up filling and start moving in the other direction. That's probably what's going to happen. You know, we had these trend lines break, but we never got confirmation or a follow through with the trend lines, that the second trend line that broke on the S&P and this trend line right here on NASDAQ. Again, I told you we could either get another reference point of a divergence, fill the gap with the lower high, and again, if we break to new highs above the July peak, we could go from a brand new divergence right here. These divergences gave us the volatility here and here, and moved above that trend line. So again, we're likely going to see another divergence develop right here. It'll probably take us to the upper boundary of the channel there in the weekly time frame, which you'll see in this video. If we broke above this level, we'd likely go slam into that channel again. Well, that's probably going to be the case. Be watching for some kind of sell-off. We had a gap and go. I'll be looking, now that we've reached an extreme, I'll be looking to see if we start to turn and then turn back up and maybe form a divergence in the next several days. Talked about how we reached extremes on the RSI earlier in the week, Monday, Tuesday, and again, I talked about how being support levels and could bounce with the presidential election and the Fed meeting. Again, these things turned up. The S&P formed a bullish divergence on the RSI 60-minute chart. Talked about the support at the 50 period in the daily time frame, and as we were getting that, I talked about this divergence on the S&P 500. NASDAQ got a higher low, but S&P got a divergence. And again, the horizontal support held, and we bounced off the 50 period moving average. I told you to be watching the gaps, watching the trend lines. We got above this trend line here in the 60-minute time frame, including it. But if we exclude the shadow on the daily chart, which you'll see in this video, we got above this trend line. I told you if we do get above that trend line, we can go to a new all-time high and back test the other trend line. That's exactly what we're doing now. We talked about a back test of these trend lines at great length and detail. I told you I expected that was going to be the case, and if we did it sooner rather than later, we can move to a new all-time high. And there was not enough evidence that a peak was in over here, even though we had a divergence. And again, we're moving to a new extreme, so we're likely going to form a brand new divergence here and then begin to complete the topping process with the trend lines in the monthly time frame. Again, my target is 5750 to the low 6,000 area. We may reach the low 6,000 area. We're at the low 5,900 area right now. May reach 6,000 at low 6,000 area, or even overthrow it and go to 6,100 if we overthrow the trend line in the monthly time frame. P bounced off of the 50 period moving average. The VIX dropped back below the 50 period moving average. I told you if that happens, we move back to the lower band into the 200. Here we are. Talked about that. Get our big rally with the presidential election or with the Fed. So that has happened. I told you again, 50 is still above the 200. It's warning again that we're in a topping process. The 50 is still above the 200. But like I said, again, we can get a bigger rally towards the monthly trend lines. Again, my target level, 5750 to the low 6,000 area. I've talked about this at great length and detail. We still may reach 6,000 or even overthrow the trend line and hit 6,100. That's possible. Hollow red candlestick here and a candle of indecision in the form of a little spinning top. So again, we'll be watching to see if we pull back. Do we fill that gap immediately, or again pull back and then form a divergence on the 60-minute chart and then begin to peak out? But again, nothing has changed. We're still going to have a recession. We're still in a topping process. We've rallied back up distance levels above the back test of the broken trend line, or the upper boundary here on the weekly chart, or the broken trend line right here. Again, it's still possible that we reach low 6,000 area, which is the trend line in the monthly time frame. That's where I'm getting that level. Again, we don't have to reach that level. It's possible we do. Looking for clues. We could still back test these trend lines. Thought it was going to happen, that we were going to get a back test of one or both of these trend lines Monday and Tuesday, and over the weekend I talked about this at great length and detail. We can set up a triple divergence with momentum in the S&P 500. Now over the weekend and on Monday and Tuesday, I've been talking about the Dow a little bit in my videos. And again, I've been talking about how the Dow became very, very oversold. We've moved back to the 50 on the S&P and the NASDAQ and the Dow here, but the Dow has taken a bigger beating. And I was going to be watching, does the Dow go up and make a Fibonacci retracement, or does it go make a new high and slam up into major resistance again? We had turned off of resistance on the 125-year trend line right here. But again, the further right you go to the chart, not this trend line, but this is a daily chart, but the long-term trend line. So again, I talked about this level. I was up just over 3.5%. Nothing has changed. We had a sell-off, and we've gone a little bit higher than this level. Now, again, likely see topping process come to a conclusion. But I talked about Monday, Tuesday, over the weekend, the possibility of a rally back up surrounding the presidential election. The markets like certainty. That's what we got. We got certainty. We had uncertainty surrounding the election, and it took days for them to figure it out. Markets don't like uncertainty. They like certainty. We had a winner. It was announced the night of the election. Markets like certainty. We recovered in one day, really in 2 days, so the Tuesday session, but we recovered all of the movement down on the Dow. And I'm showing you the Dow because I talked about this sell-off of the Dow, suggesting again a bounce off these 50-period moving averages and horizontal support. I've talked about it at great length of detail. I talked about a back test on the S&P 500. Talked about these two trend lines over and over again. I told you we're likely going to bounce here. We're likely going to go back and back test these trend lines. I talked about the two trend lines, and my trend line moved on me. But your signals were bearish ahead of the election. They could turn back to bullish, and we can back test these trend lines. A lot of people have selective hearing. They only hear what they want to hear. I say, hey, we're going to go back test trend lines. We're going to bounce off support. Unless we break it, that would do more technical damage. But I told you the top, there was not enough evidence that the top was in over here. And I told you we could still go move to new all-time highs. Again, say, hey, we're going to go back test these trend lines. We're going to bounce off support. Some people only hear what they want to hear. That's what I've been saying. Talking about backtesting the trend lines. Well, we went back and we broke this original trend line. I talked about this at great length and detail. Videos on Monday and Tuesday and over the weekend. And again, talked about coming back here. Talked about that there was, you need confirmation and a follow through in order to break down. We never got that. Again, candlesticks are meaningless. We broke this trend line. We got a confirmation bar with this push down here, but there's been no follow through. With this trend line, the red trend line that broke, we got a breakdown there, but there was no confirmation or follow through at all. And I told you if we're going to break support, that has to happen. It didn't happen. Because I'm looking for a topping process, again, I've been talking about all-time highs. S&P can make new all-time highs. I told you over here, that may not be the top. We still may go back and make another new all-time high. My target level is 5750 to the low 6,000 area on the monthly chart. As high as 61 if we overthrow the trend line in the monthly time frame. But again, that's my target level. People, because I'm looking for a top, they don't hear me say, oh, we're going to go back and back test the trend lines. We're going to bounce off these levels of support. Signals turned bearish, but I told you there was no confirmation, and I told you the jury's still out whether that's a peak or not. And I told you on Monday and Tuesday we may get a big rally with the presidential election or with the Fed, come up and back test these trend lines, and we've now come back this original trend line that broke. And I told you if we hit the original trend line and got above the second trend line that broke, we can go back to the first trend line that broke and back test it, and you can move to a new all-time high. And we still may not be done yet. Just underneath that, if we include the shadow right here, and again, even if we go a little bit higher, we still might overthrow it and still go and hit the trend line in the monthly time frame. What's my target? 5750 to the low 6,000 area. I've talked about this at great length of detail. But again, because I'm looking for a top, people don't want to hear, hey, we're going to backtest. Hey, we can bounce off these trend lines. Backtest, we can go to new highs. So again, people have a presuppositional bias and they only hear, if they're bearish, they only hear bearish things. If they're bullish, they only hear bullish things. Talking about new all-time highs, since the sell-off back over here, that's happened. Now I'm looking for a topping process over here, and I told you there's not enough evidence for that. But again, the rally that we had today has done nothing to change the topping process. It's done nothing to change that we're still going to have a recession. My weekend update and over Monday and Tuesday that, again, if we rally here, which, again, I told you there's a very good chance it's going to happen, again, we could blow right past this trend line and hit this other trend line. And, again, that would take us to the upper Bollinger Band. That would take us up towards the upper boundary on the weekly chart. The weekend, on Monday, Tuesday, I talked about if we get a big presidential rally or a rally with the Fed, we can go back up and hit this trend line and still move to a higher high and get a divergence right here on the RSI. That seems to be what's happening, and get a divergence. We had started the week off with getting an MACD cross. I told you it could be prevented if we get a rally. We've rallied up now 0.5% for the week. And again, we were down the previous 2 weeks and we went back up. And where are we? Back up at this trend line. So again, and we may even overthrow it. The NASDAQ did at the July top. NASDAQ's moving above that July top. I'll talk about that. We have the target level of 5750 to the 6,000, the low 6,000 area, which is the target level on the monthly chart. So even if we overthrow this level a little bit, we have that target level. This divergence is still going to play out. Election is not going to stop the divergences from playing out. The election is not going to stop the recession from happening. The recession is not going to stop, the election is not going to stop a process in a bear market from happening. It's not going to happen. It's still going to happen. We know the recession signals are flashing. Divergences are there. They're not going to magically disappear because President Trump won the election and he has the Wall Street celebrating he has good economic policies. It's not going to stop these things that have already set up. Talked about a rally back up into this level. If we attempt to go back up and hit that first trend line that broke on our rising wedge, back test it, this is where you're going. And again, I talked about that, and that's where we're at right now. Because I believe we're in a topping process. Again, people cherry pick what they want to hear. Here and talk about back testing broken trend lines all day. Some people will just tune it out and never hear it because they don't want to hear it. About the S&P making new all-time highs, some people tune that out. Hear the bearish things, and then when I talk about the bulls, they don't want to hear that. Reversal happening and a bear market coming. So again, people cherry pick what they want to hear. Again, talked about new all-time highs. I've talked about coming back up here. That's what's happening. I'm looking for a topping process. Nothing has changed. But the rally that we had today, a big rally, then the election, people get very emotional. Again, all's the election did was take us back up to these resistance levels. Now, again, if we overthrow this level, we have the monthly trend line. Again, what's my target level? 5750 to the low 6,000 area. Because we moved into a new month, we were at the high 5,900 area. Now we're in the low 6,000 area because the trend line is rising. The further right to the chart you go. Just above 6,000, low 6,000 area. We might overthrow it and go to 6,100, but it's likely we're not going to be able to stay above this trend line, or we'll likely turn down off of it and eventually move back to this midpoint of the channel beyond the pandemic low right here, and again, likely drop 50 to 65% of the S&P and have a bear market. It's a monthly chart, long-term monthly chart. President Trump is being elected at the end of the economic cycle. It is likely we're going to turn off of this trend line and again, have a recession. The market will price in the recession. He can shorten it if he does certain things, but it's not going to stop a legitimate recession from happening. Signals have already been flashed. Shorten the recession. You can make it less painful, but you're not going to stop it. Trump is going to inherit a recession. Know that because reliable recession indicators that have been proven over and over. We have the uninverting of the yield curve from September. That's telling us that, hey, within the next 6 months or so, we're going to have a recession. Maybe a little bit longer, maybe a little bit shorter, maybe it's 3 months, maybe it's 9 months, but we know it's coming. This is a reliable recession indicator. We know the Psalm rule's been triggered. Unemployment rate. The 3-month moving average is higher than the low from higher above 0.5% of the low that's been made over the last 12 months. It's already been triggered. A reliable indicator that's not been wrong for decades. It's not going to be wrong now. Rally back up, and again, likely completing a topping process. Going to see the recession. It will eventually price that in once the topping process has completed. It's telling us that President Trump is going to inherit a recession. Viable recession indicators take time. His policies, he can do things, but it's going to take time to implement the policies. He can make it painful. He can do certain things, celebrating like it did when Trump was elected in 2016, tax policy, deregulation, all these things that Wall Street liked in 2016. Well, President Trump is coming in end of the economic cycle. It's like George W. Bush did at the 2000 top. President Obama came in at the beginning of the cycle. He came into office after the 2008 election. So again, President Trump's coming in at the end of the economic cycle. And again, as good as his policies may be, and Wall Street celebrating, Trump's going to implement good economic policy. That's why we're getting the rally. It's not going to be enough to stop the recession. The policies that are currently in place will take time to undo, and then it will take time to implement the changes and to work its way through the economy. The recession is still going to hit. And that's what people don't understand. Say this, okay, we haven't had the recession yet. Why? Because of the crazy government. We're spending nearly $8 trillion a year right now. Okay, that is postponing the recession. Okay, Trump's talking about spending less. What do you think that's going to do? Less government spending. Been artificially propping up the economy right now. What do you think is going to happen? Going to usher in the recession. Nothing's changed. We're still going to have a recession. The election didn't change that. We're still going to have a topping process. Coming to the end of the economic cycle, we're still at the major trend lines of resistance, monthly time frame. Hopefully, President Trump will implement policies that will shorten the recession, but it's not going to stop it. It's still going to happen. He's going to inherit a recession. He'll likely end up getting blamed for the recession. Signals are warning that it's going to happen. The presidential election is not going to make all these divergences magically disappear. Make the recession indicators undo the things that have been in place that is going to cause the coming recession. We have negative divergences all over. Now, again, I've talked about, coming back up to the trend line. Talked about the divergences all over the place in the weekly time frame. They're not going away. They're still there, but we're in a topping process. If we backtest hit that broken trend line, we can come back up and hit the upper boundary of the channel and even overthrow it. The NAAIM exposure index, what active money managers are doing, again, we're getting another lower high of divergence in this most recent price action. We had this larger divergence with our peak right here. I talked about that. I told you we might see another divergence right here. The RSI did it. The RSI is doing it. And we have it here with the exposure index. Making the divergences disappear. They're still there. Talked about a great length of detail before we ever had this rebound back up that we're at the 10-week moving average. And again, sometimes you get these red bars, and on the second or third bar, you rebound back up with the counter trend. Sometimes you move to a new high. Other times you get the red bars and you start turning down immediately. It doesn't stop that we still have a negative divergence here on the Awesome Oscillator and the MACD in the weekly time frame. Again, these signals, once the topping process is done, they will begin to play out. But as I keep saying, there wasn't enough evidence for the S&P that it peaked yet, and we could still move to new all-time highs if we backtested, and that's what we're doing now. So we're watching closely. We're saying that something's going to happen in the not-too-distant future. Not done yet, as we're still in the topping process. The market is designed to do as much damage to the bulls and bears alike. You got to suck in the bulls into buying the top. We rallied up, get the short squeeze on the bears. Finally, when everybody's complacent, the rug pull happens. I've been talking about this. Got to convince the bears there's no possible way the market's going down. You have to convince the bulls. Not bear markets anymore. We're just going to keep going forever. Once everybody is convinced, the bears have been frustrated. They throw in the towel, and then it's the bulls' turn, and then you pull the rug out and you start putting the wrecking ball to the bulls. It's the way it always happens. So it is a virtue. But I told you we can rally back up, test the trend line, hit the upper boundary on the channel. Well, that's what we're doing. We still may go higher. Again, that low 6,000 area in the monthly time frame. If you watch the video all the way through, you will see that monthly chart. Momentum was bearish going into the presidential election. I told you, again, that could change if we get a big rally with the presidential election or with the Fed. It could be we get a rally with the presidential election, a sell-off with the Fed, or maybe a rally with both and another catalyst gives us a sell-off. In the Middle East, earnings, whatever the case may be. Post-Fed sell-off, again, we're likely going to get a 1/4 of a point cut. We're going to have the Fed meeting on Thursday. Again, we'll be watching and see what happens there. Momentum gapping higher sharply. S&P, and by the way, when Donald Trump was elected in 2016, we went up 2%, but then we kept going. We had sold off here. We had rallied already. We had a little bit of a pullback ahead of the election, but we had rally here. And again, we're going into key resistance levels. So again, we're going to be watching as we're coming to the end of the economic cycle. And NASDAQ, again, now we're getting a green bar in the daily time frame. Again, likely going to form another reference point of reference of divergence on the MACD and the Awesome Oscillator. I talked about this at great length in detail. If we were to try to rally up, if we were to try to exceed the July peak, which we ended up doing, this other divergence that gave us the sell-off, here, but there was no confirmation, no follow through. We bounced off the 50. Again, when you break a trend line, you've got to get confirmation of follow through. We did not have that with NASDAQ. We did not have that with the S&P 500, confirmation and follow through. And now we're pushing back up. So again, we're going to be watching the green bars here and for another reference point of a divergence to complete on the NASDAQ daily chart. Eventually this gap will get filled, we'll come back, and again, it's likely forming a double top with this peak over here. As I've said, I thought it would be a lower high, but I told you if I was wrong and we moved above that level, we go slam up into the trend lines and we get a double top with the higher high. Nvidia's doing the same thing. Bitcoin is likely doing the same thing. Bitcoin and NASDAQ peaked with the negative divergences that were forming in November of 2021. Well, it was a month of November. NASDAQ, it moved to a new high. I told you that I thought we had a peak over here in July. I was wrong about that. Why did I think that? Because we were slamming into the monthly trend line, and we were slamming into the weekly trend line, and we had 9 counts and other things. But I still think, again, I told you that if we did go higher, we would slam right in that trend line, which is a little bit higher. Could reach this trend line right here on the NASDAQ, and again, overthrowing this trend line right here. And again, sometimes you do get an overthrow, but as what I'm looking at is, again, we still have a rising wedge here. Again, likely doing a redraw from this low now, but it's still a rising wedge. And again, same thing with the NASDAQ as the S&P. We broke the trend line, but there was no confirmation. There was no follow through. And I told you if we got back above the trend line, we could come back and fill the gap or even move to a new high. And I told you if I'm wrong about this being a peak, we can go to a new high, a new all-time high on NASDAQ, back up to the upper boundary in the weekly time frame and in the monthly time frame. So again, still had a divergence here that gave us this sell-off. We're rebounding back up, and again, likely still forming a multiple point divergence. We'll see if we go a little higher, or if we pierce this upper level here, and then that's the end of it. Maybe start seeing a reversal happen or get a doji or something up here. But again, likely nothing's changed. We're likely still in a topping process. I told you, again, throughout the sell-off, we're going to come back and fill the gap way up here. And again, with the rallies, I told you we were going to come back and fill the gap. We finally did. Yeah, okay, now it's time to watch for a topping process. Either we're going to set up a lower high below the July peak, or we're going to try to push above it and go hit the trend line. I told you, again, we may slam into that trend line. Wrong about the July peak being the top. I had good reason to believe that for the major resistance, but I told you we could still, again, the further right you go to the chart the further right you go to the chart, the higher up you go. So I told you we could overthrow this level a little bit and go up towards this trend line. We have a nice looking channel here from the pandemic low. Again, we overthrew it a little bit here. Maybe we overthrow it a little bit here, but we're rallying back up towards it. I talked about that if I was wrong about this peak. Now, again, this trend line right here and the trend line in the monthly time frame, again, with other signals, why I told you I thought, hey, likely had a top right there. I have the guts to tell you exactly what I think, but I also tell you that if I'm wrong about that, hey, this is where we might go, and this is what I've been talking about constantly, that if we did move to new high, this is where we would end up going. And again, to form a divergence, we had a Class B divergence at this peak right here. This will likely set up a Class A divergence being lower with the indicator but higher with price. So we'll be watching the NASDAQ. We bounced off this blue trend line right here. And again, this trend line can halt the advance. These trend lines are pretty amazing. This is where the accelerated trend line right here of this channel and this trend line, the larger channel, this is where they intersected. And again, going back up to test that level again, we have this larger channel on the monthly chart for the NASDAQ 100. And again, I told you we were slamming up into that in July. Again, the further right you go to the chart, the higher the trend line goes. We're coming right up to it and slamming up into it again here. So again, going to be looking, looks like we're just maybe right below it there. That again, we hit that other trend line in the weekly time frame. We could see a reversal happen. Sure did with the July peak. Off nearly 16%. Again, I'm looking for a top to develop here. This is a parallel boundary with the lower boundary over here that gave us this tech bubble peak. It's just a parallel boundary. And again, NASDAQ could have a bear market that comes down to this midpoint beyond the pandemic low to test that pandemic low and move just beyond it. But I wouldn't be surprised to see a 60, 70%, maybe even more sell-off on the NASDAQ once we usher in the bear market. But topping processes take their time to form. And again, when we had the tech bubble, we hit this peak. Well, in 2 months, we dropped 42%, I believe it was, just in two months. I mean, it lost nearly half its value. And people get complacent. Oh, no. Nothing's going to happen. And again, I'm just telling you, these trend lines are there. We're in a topping process. But I warned you about, again, backtest on the S&P to new all-time highs. I told you I thought NASDAQ had peaked. I was wrong about that. But I told you also that if it hasn't peaked, again, we can go back up and hit this trend line, which we are now doing. I'll even bring it up close here so you can see it. Here's the trend line that we hit right here. That's why I told you I thought we had a top right there on the July peak. And here we are just below it here. And again, just a little bit higher. Again, that could take us to just under 21,000 or just right there at the 21,000 area. But again, that's assuming that the rally can continue up to that level. We'll see. I believe we're going to start a bear market off of this level of resistance. Like I said, because the market takes its time doing what it's going to be doing. Again, people that are looking for top, if you think, oh, there's a top, then the bears, they start throwing in the towel. It's not going to happen. It's not going to happen. I'm patient. I said, oh, we're going to make new all-time highs on the S&P, and maybe we'll backtest this trend line here, and we're going to go make a new high. If evidence the top is in for S&P and so forth, people don't have that kind of patience. And the bulls, they go, you get the perma bears, they don't want to hear, oh, we're going to move to new all-time highs. Hey, we're in a topping. They don't want to hear that. And the perma bulls, they go, oh, this proves we're not going to have a recession. And again, they become complacent. It's complacency with both bulls and bears alike. And then that's usually when you get your tops. But again, I'm just looking at these trend lines, and for a topping process, we've reached the 20,400 area. Now I'm looking for a top. Told you I thought we had it in July. Didn't play out. I was wrong about that. I do think we will see a top right here, but I gave you my reasons why I thought there was a top, and they were good reasons. Like, I think that there's a top forming right now, but we did go a little bit higher. Still can go a little bit higher on the NASDAQ. We'll be looking for clues.